Hey guys, Akil Stokes here, and welcome to another edition of the Trading Blog. Today was an FOMC minutes day, so the markets were pretty choppy the entire way through. And it's been like that all week. I would expect it to be that way through the remainder of the week as well, since we do have a non-farm payroll report coming out this Friday. So we haven't been able to get a lot of action in the live room, but I still did take two trades today. One was stopped out, came close to getting targets, then got stopped out right before the FOMC. Another one is still in progress right now, sitting a little bit in profit, but certainly nothing big enough to get me anticipating a win there. So we'll have to see how that Aussie dollar trade plays out. Now, because of the consolidation, we've been taking a lot of advanced pattern formations. In fact, each trade I've took this year so far has been an advanced pattern trade. And I got the question today in the live room, Akil, are you only a pattern trader? And the answer is no. It may seem that way. I do a lot of talk about pattern trading when we do these videos, but the main reason is that's because advanced pattern trading is one of the easiest ways to get started. I've been able to work with thousands of traders over the last 5 years, and the majority of those traders, the easiest way to get them started, the easiest way to have something that is testable, verifiable, repeatable, have a plan with very, very strict rules is by trading advanced pattern formations. That's because you have that very strict if-then thought process. If price action hits the 50% retracement, then I need this for the C leg. You know, instead of structured trading and price action trading, I guess it's all price action trading, but structured trading is a little bit more subjective, where it takes a little bit more skill and experience in interpretation to get consistent in those executions. So I do trade patterns myself, but not my favorite. I actually prefer, my trading ego prefers the structure-based trades and trend continuation trades a little bit better. But I think it's important to diversify your trading plan. That way you have different options and you have the ability to take advantage of different markets. Now, I want to share with you a clip of a pretty cool discussion we had in the live room. We did perform a lot of analysis. And if you guys are interested, guys, I have a free 1-week trial in both of our live rooms, the New York room and the London room. Get in there and check it out. We have the best community of traders out there, in my opinion. And I've heard nothing but good things from everyone that's been able to stop by. So we'd love to have you in there. Just go to tradeempowered.com and you can sign up. But one of the discussions we had today was on evaluating your trading and kind of the importance of doing and going through that evaluation process if you want to continue to evolve as a trader. So I'll share with you a clip from our live room, and I'll see you guys tomorrow with another edition of the Trading Blog. I'm going to do a poll question real quick, and I want you to honestly answer it. This is an honest place, right? Do you evaluate your trading day? Yes. No. And again, this isn't a place to show off. I don't really care if you do or not. We don't judge you in here. But we want you guys thinking. So right now, I don't know if you guys can see the results, but it's about 50-50. Yeah, that counts. Yeah, any type of evaluation. Yeah, Turner. It doesn't have to be day. It could be daily. Or every other day. It could be weekly. That's fine. Yeah. For some of you, if you're a swing trader, it could be monthly. Yeah. So I should have just said, yeah. Do you evaluate your trading? Yeah. And these are the type of questions you want to ask yourself, right? When you look at this trade, let's say you enter this trade, right? And let's say this trade loses, right? Let's say you enter it right here. It comes up to this first level. And it crashes down, right? These are the type of questions you need to ask yourself. What stopped price action from going to my potential target area, my potential profit area? Was there any clue that I overlooked, right? Was I, Lisa said, was I rushing through the charts and was there information that I ignored because my mindset was focused on the trade? And that's something that happens regularly, guys, right? That's something that happens regularly. You will want to do something so bad that you ignore any other information. I was just working on a pretty cool video. I'm going to be putting out a video series. I don't know when I'm going to put it out. I may hold it for a few months. But I've been recording videos for a video series just on some different entrepreneurial stuff, some business-minded motivational stuff. And I just did one on fear. Or I'm going to do one hopefully today on fear. And fear is an interesting thing because when you're scared, when you have fear, you don't evaluate your opportunities, right? If an angry barking dog or a big bad bear came into your room right now, what would you do? Quick, 5 seconds. Tell me. 1, 2, 3, 4, 5, right? Now, did you guys go with, Lisa says, punch it in the face. You take that, bear. Ugh. What's your plan now, bear? Every bear has a plan till you get punched in the face, right? Going back to our earlier conversation about Mike Tyson, right? But seriously, did you pick the first thing that came to your mind? He's so good, right? That was the first thing you came to the mind. You typed in, right? Because you had 5 seconds. Did any of you actually take the time to evaluate the situation and kind of think about your options? If running was the best option, or shooting it, or punching it? Or what if you had a big steak next to you? What about throwing it the meal, right? When you're scared, you don't evaluate your options. You just do what comes natural. And that's the same thing with like negative thoughts and stuff like that. That's what the whole deal is going to be about. But the same thing with trading, right? When you fear that you're going to miss an opportunity, when you fear this or fear that, you don't evaluate the different options. You kind of just do the first thing that comes to your mind. That's kind of like revenge trading, the same principles behind that. Where you take we've all revenge traded before, right? Where you take a revenge trade at the time and you look back and like, oh man, that was stupid. Why the heck did I take that trade? God, why did I get short right into a double bottom? Gosh. But at the time when you execute the trade, right? That wasn't on your mind. You just want to get involved. So you want to make sure you're evaluating your trading, guys. It's a very good habit to be in. You are your own boss in this field, right? No one else is going to tell you if you're doing well. Well, if you're a transformation member, you can send stuff to me and, we'll talk to you about it. But aside from that, you have to evaluate your own trading. And even if you are a transformation member, you're not relying on us forever. At least you shouldn't be. So you've got to be the one that goes in with a clear mind, an unbiased mind, and ask yourself, was this the best trade? Did I enter correctly? Did I exit correctly? Did I manage correctly? And you need to get in a habit of doing that. And that's how you get better. Because if you're a trader that entered here and price action bombs out, maybe I shouldn't have shot for profit targets up here because of this structure that was down here. Or maybe this thing does rally up, right? Maybe it does rally up and you're someone like me that doesn't take the trade. And you see that, okay, well, it did break through and it came to the previous lower high. And what if you have 6, 7, 8, 9 more trades that do the exact same thing? Do you think some adjustments may need to be made to your rules? What do you guys think? That is the process of trading. That's the process of trading. That's how you get better. You're consistently evaluating yourself and asking yourself, why did this work? Why didn't that work? And how can I get better? It doesn't mean making a rash decision. It doesn't mean you see something, this single trade works out, and now you change everything. No, but you store it. You store it, you store it, you store it. When you get a big enough sample size, just like back testing, then you start making adjustments off of it. So that's the key. All right. Questions before we go on to our next pair. We're going to go to what? We did Aussie dollar. We're going to go to dollar Canada next. Any questions?